Good morning. This is Paul Whitley with CEO Talks. Thank you for joining us. Please let us know where you're joining from and what you're working with. At this point, we are taking a little bit of a pivot from the normal CFO type discussions. We've been talking about how to get funded, how to do different projects. Today, we're going to spend more time on how to be extremely profitable and principles of creating business wealth. Now, we've got things that we do, C-suite support. We help companies get financed. We help them get their financials in place, their verticals in place. Right now, we're concentrating a lot on R&D tax credits that 80% of the companies in the U.S. can take, and probably 5% are in the non-large companies. We also, right now, that everybody needs to know about the employee retention credit program that is out there and can be done. So we're doing that a lot with our clients right now. But today, we're going to pivot. We're pivoting to sales. And I am a CFO that is unique in the fact that I consider figuring out or trying to find out how do you increase sales, not how do you decrease expenses necessarily. Now, you need to control them. We need to find them. Our effort here is profit to the bottom line and money to the bank. So today we're going to be here with Kent Billingsley. Kent has written a book, Entrepreneur to Millionaires. Now, in that book, we talk about how to build a very profitable company, fast growth, but become embarrassingly rich. Now, I think everybody in the audience would love to know how to do that and know how he thinks he's got the best mousetrap in the world here to put that in place. So today, for even me, because most of the people I deal with are telling me do all of these things to be that much better, to be that much more profitable, to have that kind of growth. And some of these ideas in reading the book and presenting today are purely going to fly in the face of that, but they make a lot of sense. So today, Kent Billingsley, give me a brief introduction. Tell me what got you here. You know, why did you decide to grow up and do this?
Yeah, it was interesting. I was actually working up the street in EDS, and I had a wonderful career and worked with a lot of tremendously wonderful people, including Ross Perot. And about 25 years ago, the leadership asked me to form a team and go back into the business units and see if we can find ways to not just achieve incremental growth, but if we could find ways to optimize growth. How could we scale that top line and protect that bottom line? How do we bring more consistency, more profitability, more predictability to the revenue side of the business? And so I started doing that for a few years. That got me promoted to CMO and CSO and other things. And then I came back. I moved to Hong Kong. I came back in around 2000, built out a software company. And in about 2002, I started doing this for other companies, kind of in a fractional basis, kind of a fractional CRO, Chief Revenue Officer, and helping mostly private companies from 0 to 100 million understand, so how do you scale that top line? How do you dramatically increase your sales revenue and profits without spending more money, time, or resources doing it? And it's been a passion, because helping literally thousands of people become millionaires and multimillionaires with their companies has just been an absolute joy.
I understand. I'm working with a company right now. A conversation yesterday, we were talking about where their revenue was and where their production was. And in that conversation, we're bringing around that first we tried to hire a salesperson that didn't work, but ultimately did find a couple of salespeople that are doing a good job now. And now that they're doing a great job with sales, the operations is going in trouble, structural. What do we have to do to get there? So the discussion was, we don't need to hire more bodies. We need to be more productive. We need to figure out how to get more down that manufacturing line and less waste, less destruction of product. So all of those things came in that conversation yesterday along this line. What do you see as the biggest challenge of entrepreneurs right now?
Yeah, for entrepreneurs, and you know, again, that word's kind of been hijacked, that it has such a narrow meaning, but that can be CEO, an entrepreneur can be somebody inside the company, but in aggregate, the main challenge today, the main problem for all of them is not starting, running, or growing their business. It's learning how to make money they can keep. No one's taught them that, and there really isn't a book or a speaker, and that's why I wrote this. That's why I give speeches around the world, because your business is only as good as the ability to make money from the value that you bring to the marketplace.
Well, one of the things that you've got is increasing your revenue and profits while reducing your marketing budgets and products and services and things that you do, which flies right in the face of virtually all of the gurus that we have out there that say this is how you get more revenue. You've got to have more salespeople. You need to have more product verticals, etc. And when I'm reading this, I'm going, okay, well, that's kind of the antithesis of this. So tell me about that.
You know, it's interesting because that's one of the big ahas we discovered inside the business units, and now working with thousands of entrepreneurs and companies, is they've all been taught to spend more to make more. They're all on this paradigm to get bigger. You've got to do more to get more. And when in reality, you actually don't. You don't need to spend any more at all. And I want to give you a quick statistic because this is so important. In our research, with literally inside thousands of companies, 67% of their marketing and sales spend is a complete waste. Matter of fact, some of those dollars actually work against them. 8 out of 10 sales calls actually move the relationship backwards. Even though they get enough information to create a proposal, the relationship moved backwards, eroding the brand.
It goes to a finale, and the finale is not good.
Yeah.
That's where we're going?
Yeah, and so what that means is companies are burning so much of their wealth potential in their marketing and sales when they don't need to. I'll give you one more quick statistic, because I presented this yesterday. 50% of what is in pipelines will never close, will never turn into an opportunity, will never become a client. They're what we call zombie deals. But they sit there forever, and the salespeople keep trying to keep them alive and keep putting more bandages on the zombie. Let them go, walk away.
I understand. Well, we're talking about products, we're talking about services, and et cetera. And I have been a proponent for a long time, and I guess I still am. I want to hear your thoughts on this. Is you build your product and service in your brand. You want the best brand you can have. You want the best service you can have, the best product you can have. And your discussion in the book comes around to, you can be a millionaire without having the best. You can be a millionaire with having average, as long as you're consistent on what you're doing. So again, I'm saying, how do you do that?
There's the relentless pursuit of perfection, and so many entrepreneurs and business leaders, they think they just need to make their product a little better, a greater wow customer experience. Well, there is a point of diminishing returns, and we have a lot of case studies of companies and CEOs and entrepreneurs that didn't have the best product in the world, didn't have the best service, and they're able to generate millions to tens of millions of dollars more because they can deliver on that value proposition. Quick example, McDonald's, if you looked at top 10 best tasting hamburgers, theirs is number 10. Yet how do they take over the world if they have the worst tasting product? And so you have to keep this in balance to where that doesn't become your total pursuit. But in most cases, and this is the thing we find, your products and services are good enough. You're delivering extreme value. The problem is you're not being paid for the value. You're not turning the strategic value proposition of your services and products into cash clients and customers. That's what's broken that you have to learn how to fix, that I enjoy teaching people. Yeah.
Well, one of the things we were talking about earlier is that so many companies, and I think it's true universally, most companies have trouble keeping their salespeople. One of the highest turnover jobs in the company. And in that process, every time you turn a person, you lose that continuity. You're spending more money for training. And there's so many, we've got some clients that are in the training business, and their entire job is to train salespeople. And a year and a half ago, they got involved in, well, we're trying to train these people, but what if we had better people that they hired? So they got into the recruiting business, and now that recruiting business is approaching 50% of their total revenue because people need to get that done. Now, reality is there was something broken before they got involved. And you and I had conversations about just hiring salespeople, throwing money against it. That's not necessarily what you want to do.
Well, and some more statistics, because this is really important. 98% of first sales hires fail. And the second one doesn't do much better. What people don't realize, leaders and entrepreneurs, is when you add a salesperson, and I want you to in certain circumstances, not all the time. In most cases, you don't need to add any to double, triple, or quadruple your sales production. But every time you add a salesperson, you add 8 categories of costs. You guys as fractional CFOs, you understand cost. So let me put that in a different perspective. That's 8 ways to eat at the wealth potential of your business. And so if you get that wrong, now you're going to do it all over again in those 8 categories again that you're going to be burning and wasting when you don't need to. And this ridiculous turnover that's in the sales side, and it's 40-60% in some industries. Every 2.5 years you have a brand new team. That it can be millions of dollars even for a small company wasted, as opposed to turned into wealth. And it's all about when the sales individual fits within the system. And if you don't start with the system, you will never be able to hire the competencies to maximize or optimize the wealth creation inside your business.
Kent, you had mentioned in your book that the system is broken when you go into a company. Can you elaborate on that?
And it's so interesting is because 98% of all sales fixes are to attack the person, train them, torture them. Treat them generally.
Torture is a good word.
Put more management layers on top of them. And when I get the call, my first premise is, let's take a look at that. Let's see if it is a problem. But even if it's an individual problem, the system that hires them is broken. But I can go further out more holistically into the enterprise. And in every company I'm in, I look at, wow, you know what, your model has flaws. You're lacking revenue streams. Your strategy is flawed. You're not calling on the right target market, or you haven't segmented properly. You can't tell me who your perfect client profile is, so you're calling on anybody. And so these more holistic strategic areas are broken, which actually sets up the salesperson for failure, not success. And the fastest way to clean up your company and make a lot more money with the resources you have is to go look at it holistically. We offer an MRI that allows you to understand and look at your business and say, is my system set up to actually create demand and convert that demand, or am I counting on individuals who might not even be competent to drive the success of my company, which is a bad path.
A very bad path. One of the things that we got into our conversations, C-Suite Support is an SAP, a SAP, for Strategic Alliance Partner for the Entrepreneur Organization. And you've been there for 7 years, and I said, okay, how do you do what you do, and how do you do that with an entrepreneur organization? And then where did you go to from there? And you said, well, so many of those entrepreneur organization companies grew their profits to the point to where they were able to move to the YPO.
Yeah.
Tell me about your transition, because we're very heavily involved in EO.
Good.
And would like to bring you and these kind of concepts into our companies.
Back in about 2004, a friend of mine was in an EO forum, and I came and spoke to the forum, and the forum goes, oh my gosh, the chapter needs to hear this. So I gave a keynote in late 2004. They loved it, and I picked up 20-30 clients from that particular speech, and that moved me on to do the universities, the EO universities in Montreal. I did one in Asia, I did one in Vegas. And so I ended up sponsoring EO for about 7 years, and because I had so many friends and clients, and we just felt ingrained in the whole group. The problem, they wanted me to join, but the problem, if you join, you can't solicit or sell inside EO. So I joined Vistage, and I've been a member of Vistage for 18 years. But one of the goals when I sat down with the EO members, I said, where do you want to go with this thing? What do you want to do? Do you want to make a fortune? Do you want to keep the business in the family? What do you want to do? I'd say about 25% of the time, one of them would say, get me into YPO. I want to hit that 25 million mark, and that's what it was at the time. Give me that 25 million in revenues to get me to YPO, because I want to be in that league at that point. And I said, great, we'll build that into the blueprint, much broader than a strategic plan. We'll build that into the blueprint, and we'll start to design your company to produce those kinds of revenues to get you into that league. And I, on my book and on the back cover, I think there's 3 or 4 of those folks that were in EO that graduated up to YPO and other groups. And at the end of the day, it's all about what you want to do with your business, and nobody can tell you what you want to do with it. But that was a great measuring stick of success, was being able to graduate from EO to YPO.
Well, one of the other conversations, many of my clients, or our clients, are in different operational groups that, like EOS, Scaling Up, Vern, the group of doing these kind of meetings, which I do believe are very productive and very helpful. But in the discussion we were having just a minute ago, doing all of these help your organization, but if you don't start with the original plan and the blueprint to get there, they just perpetuate some of the same problems you've already got. And working harder and smarter is one of your big things that won't necessarily get you what you're trying to achieve.
Yeah,
Tell me about that.
And there's so many of those programs I like. I like the intent more than I like some of the principles sometimes, because we just add more layers, we add more meetings, we add more bureaucracy and procedures, and that's not good either. That's where I offer more of a roadmap, because you need to see what is the progression, not that you had more meetings, but what is the production. I just wrote a blog that's going out today, why you think your marketing is being successful. And I talk about getting hung up on the activities versus the production. And then how do you actually measure marketing production versus all the flurry of activities? And this is back to that more for more, that a lot of the programs today, they just try to suffocate or add more or do more and more tools, where the organization says, I don't need any more of that. I've got to figure out how do I make money. I've got to figure out how do I get that cash flow consistency, how do I generate working capital. And so I think you have to be cautious, and that's where we run programs where we work on site with the clients to help them understand, do this, but let's stop doing this. Because optimization is not about doing more, it's about doing the most with the least. And that's a big thing. If your audience doesn't learn anything else from you, I hope they learn that stop trying to be incremental, stop focus on growing your business, start focusing on optimization, where you're generating the most you can with the least amount of resources in the fastest time.
That speaks a lot to a lot of the clients that I've worked with in the past. Is They're very cash conscious. I mean, cash is king, especially when a small business. And so to hear you say something about not necessarily needing to spend a lot more money on your sales team, but making them better is, I think that'd be really eye-opening for a lot of those clients.
Yeah, and it's interesting. I go into a lot of companies, and they are spending money. And I said, well, how would you know, or when would you know if it's an investment versus a spend? And they can't tell me. And I said, okay, I'm going to give you the roadmap, and I'm going to show you how you make sure that your marketing and sales is an investment. There is an ROI versus it's a spend, and just throwing money at the wall and hoping something sticks. And that's a great challenge. And so the way I look at the world is, and this is where a lot of companies are, is they have what I call a salesperson-based model. That their salesperson or sales team is at the center of their universe for creating growth. That's a flawed model. It's not scalable, predictable. It's rarely profitable, and I mean, there's so many holes in that. Now, we want people, especially in complex sales where there has to be a human transaction versus a simple sale. We want salespeople. You have to have them, but we want them to work inside the system and not be the center, to where if they fail, the company fails. It's too much risk and too much cost. So yeah, exactly. Yeah.
Well, I've seen in many companies, and you and I talked about a couple that sales were king. And they drove sales for growth. And I think there's an old expression, sales hides a lot of sins, or covers a lot of sins. And one of the examples we were chatting about of a company that did 32 million in sales that we got involved in, went in and looked at the profit line, every item that they were dealing with, and their contracts that they were selling under. And some of those contracts were actually losing money when you put all of the costs against it. So we went to the company to go after their clients and tell them that we're losing money on your contract. I need to do one of two things. I either need to cancel the contract, give you notice right now, or I need to raise the prices. And if that works for you, then we can continue doing business. Ultimately, they dropped their sales from 32 million to 27 million and made $1 million more in profit. Yeah. So it's kind of too many times salespeople sell just to sell. That the margin, if you don't have your margins, I was in conversation yesterday with a company. Where are your margins? What is your inventory carry? What are you having to put into that company to get that sale? And if those things don't come into play, now it comes back to your model, back to the blueprint.
There's so many points there, and I spent a whole chapter talking about pricing strategies, because most companies figure out some sort of cost and then they add some percentage, and that's their price. That's one of the worst ways to ever price anything.
Very mechanical.
It's just a cost plus. And the problem there is it almost never has any relationship to value. and things should always be tied to value. And so what happens in many cases is salespeople, they're actually taught and trained to give things away, to lower the price, 98% of all complex sales get smaller, weaker, and lower margin at the end of the sales cycle. And why is that? Because they are trained and then they're supported by the entrepreneur or the CEO to give things away or to end up buying the business. They don't win the business. They don't leverage value. They turn it into a transaction and accept what they can get. So there's so many flaws right there that you can easily clean up, and you can give the, hey, here's the choice, take it or leave it, or you can go back and do a value analysis to say, look, this is the impact it's had on your company. We feel that we're worth being paid more for what we do for you. Would you do that? Because sometimes the take it and leave it, they'll say leave. I would prefer to say, you know what, if we're delivering extreme value, here's where our pricing should be, and then all of a sudden the buyer in most cases will say, we agree with you. We can't let you go because we can't afford to lose the value. And so you brought up so many areas of opportunity to scale revenue and sales and not spend any more money and create that wealth inside the company that most businesses are losing. But they got to stop buying business and start winning business.
Absolutely. Another example, one of my clients, they had a very large contract that was in process, and it was right as we were engaging with the company. Bob was involved on the front side, and I started looking at their cost structure, and they had under this contract, their first bid that went out had them making about a 5% profit. They couldn't cover the overheads with that, and they had misquoted their product. Well, come to find out, we went back out to that company, nearly doubled the selling price because we identified what it was, and we did one other thing. We have the product itself was in a competitive market, and we were so below the competitive price that we were buying the business. So it came back. Ultimately, they've gone forward. They accepted the price, moving forward. But those things happen all day long.
Yeah, and the competitive benchmarking is one good data point that you want to incorporate when you're going through your pricing strategies. But you bring up a great point. One of the great myths that's out there, and even Mark Cuban addressed it when he wrote my foreword. He said, all sales is not good sales. There are good sales, and then there are bad sales. And my point is, your system should not allow you to get in situations where you're doing bad deals. If it is a bad deal, walk away, or go back and see, why are you wrong? Where's the misalignment in the value, in the positioning, in the competitive positioning? Where are you making those mistakes? Because what I find so fascinating is almost every company has the value and they're delivering the value. They don't understand how to position it. They don't understand how to leverage it. And therefore they end up taking that 5% margin when the buyer's like, gosh, I'd pay you more for that. But if that's what you want, okay.
Absolutely. Yeah. Well, this week I've had a conversation with a company, and in that conversation we came down to cash flow. And said, we're focused on cash flow. So you're trying to make your payroll every Friday, right? Okay, now when you're trying to make your payroll every Friday, where's your focus? You're gonna cut your legs off in your pricing to get a deal, to get the cash in, and then next week you've got to pay the bills that supported all of that. So let's step back from where you're sitting right now, get into a identification of the system, of the process, and very much to the line of what you're talking about, getting the blueprint put in place first and then execute. Tell me how you would handle that situation.
Yeah, and it actually follows a roadmap or a sequence. And the first thing to generate or optimize your revenue, and sales and revenue are two different things, and I explain that in the book, and sales can be part of revenue, is you have to become what I call revenue ready. And that's a phase where you actually understand the problem that you're solving in the marketplace, what's the appropriate business model to solve it differently, and then what are the revenue streams and ways to make cash flow to make that viable and sustainable and scalable. If you don't have those wired, stop. That's why on the front of the book, the red mark right there, that first phase is red, because if you get that wrong, stop. Don't move forward. Don't jump over into go to market. But the next phase to work into then is now market ready. And market ready is saying, okay, well, we've got the model, we've got the problem to focus on, we've got the revenue streams. So how do we prepare our company to make all the money that we could and should? How do we prepare to optimize? That's how you do your targeting, your packaging, your messaging, and your pricing strategies. Those are four principles. But the key point is these have to work in sequence. And when I go inside companies, it's like they've got things backwards. They've figured out a product, now they're marketing and selling. And I said, well, you weren't revenue ready and you're not market ready. Other than that, I can see why you're losing your assets.
Yeah.
Well, I had the alternative to that yesterday in conversation.
Yeah.
We got involved with, and the company was trying to make some turns. We got involved in getting some national contracts signed, and we do that. We'll negotiate with them or go find the people, et cetera. Got the contracts, and then we got the salespeople. Now we've got the sales. Unfortunately, we don't have the infrastructure completely in place because no one believed the sales would come. Build a field and they will come. Well, that has happened. So now it's some of the things that you just said a minute ago. They're selling products that the company doesn't have in their production model. So now we've sold something. Okay, pivot. We've got to go make it. Now we've got to get it priced properly and then get back out. That structure can kill you.
Well, a couple of thoughts there. And I've been in technology 30 years. I've built out now 500 technology companies. And it's okay to sell futures if the integrity and ethics are there. To say these are futures. We don't have them yet. This is a beta, or this is what we're producing. This is where we are. But to sell things that you haven't produced yet and you're not being forthright or honest with the client is way out of bounds for me.
Well, let me qualify. They had the same kind of product. They had to do it a little bit different in formulation. So they didn't sell something they didn't have, but the model was going to change. That what they're going to put into the product had a slight change in how it was going to go there. But that wasn't being translated over to the production plant. There's where the break on that one was.
Well, that's an operational design flaw in that part of the system. My point is, I just hope that's translated properly back into the sales interactions with prospects and clients. I just, hey, we are changing up our model. It's going to be different than it was, and there's going to be delays, or here's where we are in capacity. I'm very much about being transparent because most vendors aren't. And if you want to be a vendor, when vendor of the year, great. I help my clients understand how not to be vendors. And how to be so transparent and forthright that it's that honesty that separates them in many cases, because they're like, wow, you're telling us the truth and you're sharing
you're not
with us.
Speaking with fork and tongue.
And you're not playing shifty games later. And I'm like, yeah, you don't have to be. I mean, prospects and clients are so thirsty for honesty, authenticity, and reliability that if you're just straightforward. But yeah, that's an operational problem, and so. Sometimes I go into operations on cleaning things up because my model and processes work, optimization and business transformation and all those things. They work on both sides of the business. My point is they just need to be aligned back to that the marketing and sales is saying the right things to create the appropriate customer and client expectations. Because what's so fascinating, I'll go back to how can companies make a lot of money with average products and services? It's because the expectations are set to where you're not trying to get something you thought you were going to get. And a great example of that is Southwest Airlines. You're not going to get a 4-course meal on Southwest Airlines. You know it. You're probably going to be abused getting to your seat, and you might lose your seat if you go to the restroom. But everybody knows that. And so when you set the expectations properly through your marketing, your sales, your branding, and your positioning, the client's like, yeah, that's what I thought, and that's what I'm buying. That's the value I'm getting. I'm happy.
But I can change my flight. I can change everything I've got to do.
Yeah.
So now I've got services that are more important to me than the seat that I'm sitting in.
Right, because your expectations are set.
That's exactly right.
And my point, and people that are frustrated with certain companies, I say, well, yeah, because they overset the expectations, and salespeople and marketing are some of the worst at doing that. They'll say anything or do anything to get that sale or to win, and then try to clean it up later. That's totally out of bounds.
All right, well, wrapping around here, you say 99% of all entrepreneurs fail. Why?
Well, they fail to create wealth. And so they stay on that treadmill of being broke, being exhausted, being worn out, and they grind out their employees and their people, and they sacrifice their health, and there's so many things that are damaging when business should be fun. It should be invigorating. That energy should go back through your employees, back to your clients. Your clients should see the joy that you have in what you do. It shouldn't be a beat down, and it shouldn't be. So many people are exhausted and worn out right now, and these companies that had to go out of business, you know why? Because they never created wealth before the pandemic. And there'll be another pandemic. It just may not be a virus. There'll be another crisis.
There'll be
And
another crisis.
if you don't learn
Absolutely.
how to create wealth now with your business, you won't survive the next one. And so that's why 99% fail or struggle, and they don't need to.
Well, Kent, I appreciate you coming in today and talking to us about it. I want to pursue these conversations for our clients. We not only want to make sure that they're banking ready and they're operational ready, but we need to find any way and every way we can to bring in how do you run your business profitably, make more money, keep more money, and then scale your business because you have that blueprint in place. So thank you for joining us today. The more you are grateful for what you have, the more you have to be grateful for. So thank you for joining CEO Talks. Kent, thank you for joining us today.
welcome. Thank
Tabor,
you.
Bob, have a great day.